Businesses are facing some of the biggest challenges to their very existence in more than a century. We're looking at this pandemic through the eyes of 11 small and medium-sized businesses to understand some of the difficult decisions that owners and directors are having to make, but also their optimisms. I'm John Passmore and I'm a consultant and director at 2SB Management Systems. Over the past 2 weeks in the UK, the death rate has stabilised and started to fall. In other countries in Europe and around the world, the restrictions and lockdown are starting to be eased. In previous videos, we've been talking about walking that knife edge between a quick bounce back and a prolonged recession. I want to show 5 graphs which demonstrate different routes back from recession to economic growth. V, U, W, L and Nike Swoosh are recovery paths we've seen in previous recessions. V was the recovery model everyone was hoping for, a short, sharp recession followed by a quick bounce back and the economy seeing strong growth in Q3 of this year. However, for this to happen, the virus would need to clear up very rapidly and the return to work be seamless. This is now looking unlikely. The U-shaped recovery sees a longer bottom of the curve and a slower return to growth. Recovery in this situation would most likely be in late 2020 at the earliest and more likely in 2021. Capacity will be slower to come back online with sluggish trade and consumer spending. If the virus lingers into the second half of 2020 with social distancing staying in place, consumers cutting back on consumption, debts building up and business bankruptcies occurring, an L-shaped recovery may be what we see. Recovery will take longer, over 2 years, and in the case of Japan in the 1990s, it was a full decade. A W-shaped recovery could occur if the virus returns strongly, if restrictions are eased prematurely. A recent survey by Opinion for The Observer shows that a very large percentage of people support a continued lockdown to prevent this occurring. If some bounce back occurs, but full capacity is slower to be reached, we may see a Nike Swoosh type recovery. A lack of animal spirits, that's cautious consumer and trade spending on investment, means that the recovery could take a year or more. We could of course see none of this type of recovery, as these are based on historic recessions, and the route back from this pandemic could take in a form that is entirely different. It's important for businesses to keep these different shaped recovery curves in mind as they plan for the coming months and years. Organisations must create a strategy that is flexible and can fit each of these potential scenarios, making sure that they have enough resilience in the business to see out worst case scenarios but to capitalise on the best. Sales revenue in April was more negative than March, with 55% of respondents saying that revenue was down at least 20%. I think what is clear though is that if we look at the realised and the anticipated sales, then certainly the feeling of a V-shaped recovery with a strong bounce back in Q3 probably isn't felt by most of the respondents, and another one of the recovery curves will apply. We've been tracking sentiment now for 5 weeks. Plotting this on a graph, we can see that at 12 months there is positivity still, although this positivity has decreased slightly. At the 3-month mark, although still negative, people now feel less negative than had previously. One of the reasons for this drop in negativity in the short term is that companies are now seeing some sales come through, be signed off and projects start. The reason for the slide in optimism at 12 months, I think, is now that people realise this V-shaped bounce back is probably not going to occur and there's going to be a slower route to recovery. The proportion of staff furloughed has been increasing over the past 5 weeks that we've been tracking things. Now, 80% of respondents have between 21% and 60% of staff furloughed. A recurring theme with a lot of the directors and owners we spoke to was around remote working. So remote working is being seen as a way in the future, in particular, to give flexibility, to retain and attract good talent. It's also an opportunity for smaller businesses to cast their net out wider and use talent who aren't necessarily in their exact geographical area, which has been a constraint in the past. These are challenging times, and they're probably even more challenging times to come as cash flow bites. However, we have to stay optimistic, and for those companies who can pivot, to look to the future and think where they're going to take their business and evolve, there are real opportunities to be had. Thank you.